advocate and a member of the editorial board of Nani Palkhiwala Arbitration Center's newsletter, Dispute Resolutions, and I'm extremely happy to take you through today's proceedings. On behalf of the trustees of the Palkhiwala Foundation, I extend a warm welcome to all of you present here today. We're all set to witness the 34th Nani Palkhiwala Memorial Lecture on decoding the Reserve Bank of India and Government of India relationship to be delivered by Professor Indira Rajaraman. Before we commence the day's proceedings, I request you all to kindly rise and observe a minute of silence. Thank you. I have the pleasure of inviting Mr. S. Mahalingam, Managing Trustee of the Palkhiwala Foundation and former CFO Tata Consultancy Services, to welcome the August gathering.
Professor Indira Rajaraman, Mr. Anand, friends, on behalf of Palkhiwala Foundation, I welcome all of you to the Nani Palkhiwala Memorial Lecture by Professor Indira Rajaraman. Let me start by saying a few words about Mr. Nani Palkhiwala. He was a multifaceted individual, a great jurist. He was the most prominent lawyer of his generation. Please read one of our trustees, Mr. Arvind Datta's book called Courtroom Genius. He was an industrialist. He was the chairman of Tata Consultancy Services right from its inception until 1996, a company that I work for. And also he was the chairman of companies like ACC, he was a director in Tata Sons and so on. He actually was the chairman of TCS from 1968 to 1996 with a short break of 2 years when he went as ambassador to the United States. He was an economist. His analysis of budget in well-attended public meetings across the country conveyed his extraordinary grasp over economics. He was a philosopher. You should read his book, India's Priceless Heritage. It's a great reference book. And he had attachment to a number of many faiths. He was an author. He has written a number of books, We the People and so on. He was a philanthropist. He is the one who donated all his wealth to Shankara Nethralaya. And of course, he was a great patriot. Palkhiwala Foundation has completed 15 years of existence. It was formed in February 2000, or 16 years of existence. It was formed in February 2003, a couple of months after the demise of Mr. Palkhiwala. On his passing away, a number of admirers of his at Chennai decided to create an entity which will preserve his memory by continuing to educate and serve the public, whether through lectures or through creating institutions. The trustees are Anand, sitting here, Mr. Arvind Datta, V.S. Jaikumar, Ranganathan, Raja, and myself. The members of the governing council of this foundation include Shri K. Parasaran, Mr. S. Ram, who's here, Dr. Badrinath Murali, who's here, Rangachari, and Bagul. Among the activities, we conduct a leadership camp every year to develop youngsters for future of India. We also conduct essay competition for the young aspiring students on various topics related to current trends. We have set up the Constitutional Law Library at the University of Madras. In 2005, the foundation promoted Nani Palkhiwala Arbitration Center called NPAC to facilitate institutional arbitration as an alternate to rendering, as an alternate to the High Court or court process. And it was attempting to bring about a speedy and cost-efficient resolution of legal disputes. There's a vibrant, the Nani Palkhiwala Arbitration Center is a vibrant center conducting many arbitration matters and is located as Mylapore. More importantly, we have been thought leaders in this important area of alternate dispute resolution, and we have assisted the Law Commission in framing amendments to the Arbitration Act a couple of years back, which was passed by the Parliament a couple of years back. Last year, NPAC opened its second center at New Delhi. We also conduct an annual international conference, and it's a very well-attended one with speakers and participants from India as well as overseas. NPAC conducted the 11th International Annual Conference at New Delhi in February this year. One of the main objectives of Palkhiwala Foundation is to bring eminent speakers to talk on topics of importance. Through his great speeches, Mr. Nani Palkhiwala in his lifetime created a forum for absorbing new ideas. With his unparalleled ability to marshal arguments and elegantly articulate it, he'll help create an informed public. In his memory, we are carrying on the same tradition by inviting eminent speakers for foundation lectures. As the MC said, this is the 33rd meeting, and the speakers have ranged from eminent jurists like Justice Venkatachalaya, former Chief Justice of India, Mr. Soli Sarabji, Fali Nariman, Harish Salve, Ram Jethmalani, Justice A.P. Shah, and Justice Santosh Hegde. We have had many governance experts, accounting professionals like Mr. Y.H. Malegam. We have had major political figures like the Prime Minister, Mr. Narendra Modi, Mrs. Nirmala Sitharaman, Mr. Yashwant Sinha, Mr. Arun Shourie, and Mr. Suresh Prabhu. We have heard experts. We have had experts in other areas, including Mr. Bishan Singh Bedi giving us a foundation lecture. We have had economists like Mr. Raghuram Rajan, and now we have an eminent economist, Mrs. Indra Rajaraman, to deliver the Palkhiwala Foundation lecture today. Once again, I have extended a very warm welcome to all of you. Thank you.
I now request Mr. S. Mahalingam to welcome the speaker of the day, Professor Indra Rajaraman, with a bouquet of flowers, and to present her with a memento. I request Mr. R. Anand, Chartered Accountant and Trustee of Palkhiwala Foundation, to introduce the speaker for the day.
Ladies and gentlemen, on behalf of Palkhiwala Foundation, it gives me immense pleasure to introduce the speaker of the day, Dr. Indra Rajaraman. But before I proceed to do that, I'll just take a minute of your time to explain to all of you how exactly this meeting happened. For about 2.5 years, I've been very carefully observing her articles, so beautifully written in some of the financial press. And I discussed with Mahalingam and told him that somehow we have to get her to speak to the audience of Chennai. Now that culminated into reality about a couple of months back, when I called up Professor R. Vaidyanathan of IIM Bangalore and told him, sir, I need a help from you. He said, what do you want? I need to somehow reach out to Professor Indra Rajaraman and request her to come to Chennai for a lecture. He told me bluntly, what is the problem? She has a landline, call her. If she sees merit in your case, she will say yes. If she doesn't see merit in your case, she will say no, that's about it. I never knew life was so simple. I called her on her landline. It took exactly 2.5 minutes for me to market Palkhiwala Foundation. She asked me something in the name of Palkhiwala, I have to say yes. Send me a mail, I will confirm. And it all happened in a matter of one day. Ladies and gentlemen, I want you to give a big round of applause for the spontaneous way in which she agreed to our request. I now proceed to introduce the speaker. Dr. Indra Rajaraman holds a BA Honours degree from Delhi University. She holds a postgraduate MA University from the University of Cornell, USA, and a PhD again from Cornell University. She taught for 18 years at the Indian Institute of Management, Bangalore, and she subsequently held the Reserve Bank of India chair at the National Institute of Public Finance Policy, NIPFP, Delhi. She was a member of the 13th Finance Commission, whose recommendations covered the fiscal years 2010 to 2015, very, very important years in the annals of India's economic history. She was in several committees that shaped the process of financial and fiscal reform over the last 2 decades, and also served as the member of the board of Reserve Bank of India for a 4-year term, again a very important period, 2011 to 2015. A book collection of her writings in the financial press titled Economically Speaking was published in January 2016 by the Academic Foundation. She has been a visiting faculty at the Harvard and Stanford Universities 1984-85 and at the Fiscal Affairs Department of International Monetary Fund in 2004. Extremely prolific writer. She told me she has retired, but I just don't believe it. I'm sure she is spending all her time researching and writing articles on matters of economic interest. So with these few words, ladies and gentlemen, I have proud privilege in welcoming and introducing Dr. Indra Rajaraman to the Chennai audience.
May I now request Professor Indra Rajaraman to deliver the 34th Nani Palkhiwala Memorial Lecture on decoding the Reserve Bank of India and Government of India relationship.
Thank you very much indeed, Mr. Anand, for that fulsome introduction. Mr. Mahalingam, trustees of the Palkhiwala Foundation, distinguished ladies and gentlemen. It is indeed a proud privilege for me to be delivering this Palkhiwala Memorial Lecture today. It's not the first time. I've also delivered a Palkhiwala Memorial Lecture under the auspices of the Mumbai Palkhiwala Foundation. I was a huge admirer of his. I did not know him personally, but I had the privilege of listening to him deliver one of his post-budget speeches in Bangalore in 1982, March of 1982. I was at that time teaching at IIM Bangalore, and IIM at that point still had not moved from its city campus to its present campus on Banerghatta Road. So I was able to go across to Vidhana Saudha, which is where the Palkhiwala talk was held. And like many millions of his admirers over the years, I was utterly mesmerized by what he said. I think the distinguishing feature of his talk at that time was, if you remember, that was pre-reform India. And union budgets in those days were characterized by a welter of changes. There would be, down to the detail of polyester fiber filament of specified diameter, tax changes on soaps, distinguishing between toilet soaps and washing soaps. And for someone trained as an economist like me, who was used to thinking in terms of monetary policy and fiscal policy in very aggregative terms, this information, this very, very specific, item-specific information was impossible to somehow understand or make any sense of. And Mr. Palkhiwala made sense of the whole thing. He was very brilliant in being able to look at a welter of seemingly unrelated information and seeing a pattern in it. And he was able to show us, the audience, how fiscal policy in those days was driven essentially by industrial lobbies, asking for a reduction in customs duty on this or that, and marked with great specificity to suit their particular interests. And he did this all with a sense of humor for which he was well known, so that he didn't sound at all offensive. And he also made us all laugh when he said, the government of India is a friend of industrialists, but I'll tell you who the government of India most favors. It is accountants. Because by making fiscal policy so very complicated and so impossible for the average taxpayer to understand, it makes them all dependent on accountants. And he says over the years, the government has enriched accountants immeasurably. So great privilege for me to be here. This topic of the relationship between RBI and the government of India, decoding the relationship, is something that interests us today because of the outbreak of hostilities between the two parties in October and September-October of 2018, about 6 months ago. Now, The relationship between the RBI and the Government of India has not always been very amicable. There have been episodes when bad feeling, ill feeling between the two, adversarial exchange of words has happened from time to time, typically having to do with the rate of interest. The government wanting a lower rate of interest so as to promote growth, the RBI wanting to have a higher rate of interest so as to contain inflation. So that was not new in what happened in September, October. The new thing that happened 6 months ago, there were two features of that particular outbreak of hostilities which commanded the attention of the entire country. One was that the government, for the very first time, invoked a provision, a Section 7 of the RBI Act of 1934, Section 7, Clause 1, under which the Government of India could demand consultations with the Reserve Bank on certain issues, and consequent upon that consultation could issue directions to the Reserve Bank. This Clause 7, Section 1 was invoked for the very first time, and as I said, grabbed the attention of everybody. What was going on? Why had things deteriorated to the point where the government was invoking a section of the RBI Act never invoked before? The second feature of that outbreak was that even though there were policy issues, not the interest rate exactly, but policy issues having to do with risk weights, Basel Tier 1 capital adequacy requirements and so on, which were raised, which were among the policy issues raised. There were about 10 of them. The key difference in terms of the issues raised had to do with the fact that the government was questioning the governance of the RBI. That is, it was not raising particular policy issues, but it was questioning the process by which the RBI was arriving at its decisions on various things. So it was very foundational. The government was questioning how internally are you arriving at these decisions. So what I'm going to do today is I'm going to focus on this governance matter that was raised by the government, by the GOI, by the Government of India. And I will deal with it in 6 segments. The first segment, in the first segment, I will look at the relationship between the central board of the RBI and the governor of the RBI, because this was something that the government actually raised very specifically, whether the central board was playing the role envisioned for it under the RBI Act. The other thing that the government raised was whether there was voting on the central board on various issues. So it's a matter of the role of the central board and whether decisions were voted on. That's the first segment. And then in the second segment, second and subsequent segments, I will move on to other things. So let me deal right up front with the central issue that they raised. In that same infamous Section 7, of which Clause 1, as I said, the raising of that had grabbed the attention of everyone, Clause 2 of that same Section 7 leaves us in no doubt that under the RBI Act of 1934, as amended to the present day, it's been amended many times, as you might imagine, it's very clear that the wording entrusts the functioning of the Reserve Bank of India to the central board. The central board carries the primary responsibility. It's such an important thing that I want to read out the wording. The general superintendence and direction of the affairs and business of the bank shall be entrusted to a central board of directors, which may exercise all powers and do all acts and things which may be exercised or done by the bank. This is unambiguous wording. The central board is extremely important. It has the primary importance in ensuring the functioning of the RBI. Then in Clause 3, what is the role of the governor? That is set out in Clause 3, which comes after Clause 2. Let me read that out also. Save as otherwise provided in regulations made by the central board, against made by the central board, The governor, and in his absence, the deputy governor nominated by him in this behalf, shall also have powers of general superintendence and direction of the affairs and business of the bank, and may exercise all powers and do all acts and things which may be exercised or done by the bank. So that word also is very key, because it's clear that the governor exercises powers which have been vested in him by the central board. The governor's powers are derivative. They derive from the central board. The central board vests these powers in him. So from this section 7, there is complete total evidence that when the government of India was asking whether the central board was playing the role assigned to it by the statutes under which the RBI functions, the government was entirely within its powers to do so. It was asking that the statutes should be respected. What about voting? In section 8 of this RBI Act, it's very clear that there is provision for voting, but voting is not mandated. So there is a difference between what is provided for in the functioning of the RBI and the Monetary Policy Committee, which was set up in 2016 by amending the RBI Act. You remember the RBI Act was amended to form a Monetary Policy Committee with 3 internal and 3 external members, the 3 internal members being the governor, the deputy governor in charge of monetary policy, and the executive director in charge of monetary policy. In the amendment which set out the Monetary Policy Committee, voting was mandated. But in the functioning of the central board, voting is permissible, but it's not mandated. And in my 4 years on the central board, there was no question of any vote being taken. No vote was ever taken on any issue. Further, other sections of the RBI Act say that the governor has a vote, but the deputy governors do not have a vote, and the government representatives also do not have a vote. So the only voting members of the central board are the governor of the RBI and the external directors. It says that in the event of a tie, the governor has a casting vote. That is, he can cast a second vote to break the tie. So the governor, therefore, can be subordinated to voting. And furthermore, the central board members, the external directors, can demand that a vote be taken on any issue. They can also demand that a central board meeting be convened. So it's, if you read all these sections together, the power of the central board has been laid out very clearly. It has the upper hand. The governor is not the chairman of the board. He presides over meetings of the board. And he is the convener of the central board meetings, but he's not the chairman of the board. Okay? These provisions may surprise us a little because we are so accustomed to thinking of the governor of the RBI as representing the RBI. You know, we think of him or her, never a her so far, but of him as representing the body, you know, in an unquestioned kind of way. And I also think that, I hope I'm not offending any members of the media here when I say this, that the media have also played a role in building up the person of the governor to such a large extent. I think we have lost sight of the fact that even without the central board, the governor represents the professional body of opinion within the RBI. The RBI has very many, very, very high-powered, intelligent, trained professionals, trained to give advice on the multiple functions of the RBI. And in just a moment, I'll go into that segment when I list those functions for you, and you'll be truly astounded to know how many functions the RBI performs. But so I think the person of the governor has been built up a little too much in public perception, and I think we have tended to forget the statutory provision which places the central board at a very, very pivotal place in the running of the RBI and in the decisions taken by the RBI. So let me conclude this segment. I don't want to go on this issue very much longer. Yes, voting is permissible, and if need be, a vote should be taken. However, I think I would caution that, as I repeated, I want to repeat that point about the governor being not just one vote on the board, but as representing the professional body of opinion within the RBI. And the decisions taken by the RBI are so varied, and some of them so highly technical, that a mere vote where the governor has one vote as against other members of the central board who may not be as well informed as he is about the various aspects of the issue could tilt things dangerously away from professional opinion and towards a kind of numbers game. So it's very important that voting should not reduce all decisions of the RBI to a mere numbers game. But feeling that when the government was asking that votes be taken on certain issues, all I can say is that it was not in contravention of the RBI Act of 1934 in any way. Then let me go into my second segment, which is about the statutory relationship between the Government of India and the RBI. No question about the fact that under the RBI Act, as indeed under the central bank legislation of any country on earth, the government as the sovereign is supreme. It is the government at whose pleasure the RBI functions. There can be no two opinions on that. And the reason this is such a standard feature of central bank legislation everywhere is because the central bank, its first and foremost function in every country is issuance of currency, and it is the monopoly issuer of currency. It is the only organization in the country which has the power to issue currency. So if you give a monopoly power that strong to an organization, the sovereign handing over that power has to retain the ultimate right to control that organization. And that is so of the Reserve Bank as well. Under the various sections, which I won't go into the details of, the government can recall a governor at any time without assigning any cause. Now, I'm not a historian of the RBI, but I don't believe in the history of the RBI a governor has ever actually been terminated like that. But then a voluntary resignation, it's difficult to distinguish between a so-called voluntary resignation and a termination. So, for instance, December 11th, Urjit Patel laid down office as governor. I think he cited personal reasons. I don't remember what the letter contained. We don't know whether he really did that voluntarily or whether he was nudged into doing that. Last year, when hostilities broke out between the two warring parties at that time, one of the precipitating factors was that the government terminated an external director, Nachiket Moore. He was terminated after a year into his term of 4 years. The standard term is 4 years. Once again, according to the statutes, the government is within its powers to do so. It can terminate any director at any time. But it created ill feeling. And on that particular occasion, statutes are one thing. So the government was not doing anything illegal. But then, in order to maintain good relationship between the RBI, which is a very, very important organization in the country, I think it was very unfortunate that an external director's term was terminated when just the year before, he had been renewed for a second term. And the information which was available at the time of his renewal, namely that he was a head of the Gates Foundation in India, was available at the time of his renewal. So no new information had come to light, as far as we know. And so it reflects poor diligence on the part of the government. If they felt that as head of the Gates Foundation, there was a possible conflict of interest because he was serving an external organization, they should not have renewed his second term. So that was an unfortunate thing which happened. It happened on 20th September, all during that very contentious time. My message for this segment would be that, yes, the government has sovereign powers, but there has to be mutuality in the relationship between the RBI and the Government of India. And what do I mean by that mutuality? The RBI is the monetary policy agent of the country. And when I go into functions, you'll see that it's after issuance of currency, that is its second most important function. But its monetary policy has to be formulated keeping in mind the fiscal policy of the government. There is a dependence between the two. Monetary policy and fiscal policy are the two important instruments of macroeconomic policy. And so the RBI should be free to be critical of the government's fiscal policy if it sees fit. There should be mutuality in the relationship. There should not be domination and subordination. So the RBI, yes, statutorily is subordinate to the government of India because the government of India is a sovereign in this country, but the RBI should feel completely free to question policies of the government of India, bearing on the RBI's area of RBI's jurisdiction, including, for instance, the structuring of the GST, if need be. Then the RBI is charged with monetary policy in order to keep the price level stable, in order to keep inflation at a level of 4% plus minus 2% as amended in 2016. But then the RBI should feel free to question the measurement of inflation, which is done by a department of the government of India. It's done by the CSO. If the RBI should feel that inflation is not being properly measured, if the CPI, if they feel that the consumer price index is not properly estimated, they should feel free to question the estimation of inflation, because after all, that is the measure by which the RBI is being judged. So unless we have a relationship of mutual respect between these two very important organizations in the governance of India, then I think there has to be a professional mutual respect between the two. Let me move on to the third segment, in which I want to talk about the financial relationship between the GOI and the RBI. The RBI is a totally nationalized central bank. And you'll be surprised to know that nationalization happened as recently as 1 January 1949. So it is a post-independence nationalization. It predated bank nationalization by several decades, but initially, when RBI was set up in 1934, it was a private sector bank. You know, it was it surprises us to imagine that a central bank could be owned by private parties, but it was owned by private shareholders. Some private shareholders put up the capital and set up the RBI, and they got this monopoly right to issue currency. So it's nationalized. As a nationalized institution, therefore, its profit, it's not a profit-making institution, but it does make a profit in the sense of an excess of its income over its expenditure. Its profit, therefore, in principle, is payable every year in full to the government of India as a dividend. The central board, however, may choose not to pay the entire dividend to government, but to retain a portion of it and put it in reserves, which is what the RBI has done over the years. And this parking of some unpaid dividends in reserves was one of the principal policy issues that was raised last year when hostilities broke out between RBI and GOI, because the government of India said those reserves are dividends withheld in the past, hand it over to us now. And the RBI was initially unwilling to do that. So that was one of the big, it was the big policy issue that was raised last year. You all know the story of what happened after that. November 19th was the meeting at which they tried to cool tempers and bring the two parties together and make them bury the hatchet. And this reserves issue was so contentious that it was shifted out to a committee chaired by a former RBI governor, Bimal Jalan. And the membership of the committee which will decide on this reserves issue, I'm happy to say the membership was very widely drawn, and it included a number of diverse people, diverse in terms of the opinions they hold. So for instance, it includes Rakesh Mohan, a former deputy governor, who has written and spoken very virulently about how these reserves should not be handed over to government. So the committee is very broad-based, and I must commend all concerned for having constituted a committee which was diverse in terms of the opinions that it included, and their report will come out in April. And so that's why I decided not to speak about the reserves issue up front, because we can wait for their report. But towards the end, I will say a few things, if there is time, on the on that report. How much time do I have? It's now 11:35. Shall I? Okay. The business of dividends and reserves. I just want to make one important distinction here. The dividends payable every year, in full or in part, are a flow going from the RBI to the Government of India. The reserves which are not paid and put into reserves become a stock, and it was the handing over of that stock of reserves which was at issue in October, November. Now, this dividend, this flow dividend, which goes every year from the RBI to the Government of India, goes into the non-tax revenues of the union budget. And if you look at the non-tax revenues of the union budget, it's actually only 14% of total revenues. Most of it is tax revenue, actually. But within non-tax revenue, this dividend paid by the RBI in recent years, and this year too, unfortunately is a very, very large item. It's a very large contributor to non-tax revenue. So this year, for instance, the total flow dividend paid by the RBI, this fiscal year, which will end next week, the total flow dividend paid by the RBI to the Government of India amounts to 68,000 crores of rupees. So 40,000 of this was paid in August of 2018 as the dividend due for the year 2017-18. The RBI accounting year goes from July to June, and the dividend is declared and paid in August. So it was 40,000 crores which was paid for the year 16-17, which was, for the year 17-18, which had been paid in part as an interim dividend of 10,000. So only 40,000 was left of the 50,000 that was due. So 40,000 was paid in August of 2018. And then an interim dividend was again declared in February this year of 28,000, as decided by the central board. So to that extent, the dividend for the full year 2018-19, which will be paid in August, will be the full dividend minus 28,000 crores, which has already been paid as an interim. So 68,000 is the total amount that has been paid. This 68,000 crores amounts to 92% of the total dividends received by the government from all the public sector banks and from all the publicly owned financial institutions. Just imagine, it owns SBI, so many other public sector banks, so many financial institutions. 92% of the dividends received as non-tax revenue from these financial institutions owned by the union government comes from the RBI. Now, this is a very bad thing. It's bad because it makes the Government of India fiscally dependent on the RBI. And that is a relationship which is not good to have. Why? The reason is that if they are so dependent, fiscally dependent on this dividend coming from the RBI, it means that they'll start questioning every rupee of expenditure by the RBI, because every rupee of expenditure by the RBI is a rupee of non-tax revenue denied to the Government of India. And there is no government that we have ever had in this country which is not revenue hungry. This revenue hunger is a constant feature of union government and state governments at all levels. So if there is so much dependence, the government will start looking at the RBI as a cash cow. It is looking at the RBI as a cash cow. And that is not a very good situation to have. In particular, and just in the next segment, I'm going to go into the functions of the RBI, and you will be truly amazed to know how many functions it performs. It performs all these functions with a total staff size aggregating all, sub-regional and 31 regional and sub-regional offices, training institutions, you name it, with just 15,000 employees. It's one of the leanest and most efficient organizations in the country. Now, if it is functioning on such a lean margin, if the government starts saying, why are you having 15,000, you can reduce your staff, reduce it to 14,000. Or if they start questioning the remuneration pattern for RBI staff, you're paying very high salaries, your pension levels are too high. In fact, when I was on the board, there was actually a long-standing pension dispute, which was not being approved by the bureaucrats in North Block on this very ground. It's a needless expenditure. Now, why is it very important that the RBI should be A, free to hire as many people as they want, and B, free to pay them whatever it wants? That is because the functions performed by the RBI are so foundational to the well-being and stability of the economy that we need very, very good professionals in the RBI, really well-trained officials, willing and able to learn all through their lives. And if they pay very poor salaries, they will not attract the quality of people that they need in the organization. So that is my fundamental fear about this fiscal dependence of the Government of India on RBI, that there will be continued pressure on the RBI to reduce its staff size, not pay as much as they should, not be able to pay as much as they should for the training of these people. The Central Bank of China, People's Bank, they're constantly sending their staff abroad to get PhDs at the best universities. And the best universities like Harvard and so on are happy to take them for their PhD programs because the Chinese government pays the full fee. They're full fee paying students for 5 years, 6 years. They send them to get PhDs. So we have to have very generous training provisions for officials of RBI, good remuneration, good housing conditions, good pension conditions. Then you attract very, very good people. So if the government acts as a constraint on that, we, the people of India, will suffer for it. Now let me go, next segment, into the functions of the RBI. The RBI is called a full-service central bank. And that is because, in addition to the 4 core functions which are performed by central banks all over the world, there are an additional set of 4 functions which the RBI performs in India. And I'm just speaking of the key functions. There are many other subordinate functions that it performs. So let me begin with the core functions. I've already mentioned 2 of them so far. The most important is the monopoly right to issue currency. Now, that sounds very trivial. It sounds as though all they have to do is to run their printing presses in Nasik and churn out the currency notes, but it's not that simple. It's an extremely difficult task because if you are assigned the monopoly right to issue currency, you have to ensure that nobody else issues that currency, right? You have to guard against counterfeit currency. And so that means that the quality of the paper, the printing, the various features on it which make it unique have to be constantly running ahead of the competition so that you constantly add more and more security features that your counterfeit issuers will not be able to keep pace with. So there is a security feature to this also. So issuance of currency is by itself a huge function. Monetary policy is and ensuring price stability is second, and in all countries, the central bank is the monetary policy agent, and that and issuance of currency are the 2 principal functions of any central bank everywhere. Third, the RBI, like central banks everywhere, is the guardian of financial stability in the country. Traditionally, the particular function which used to be quoted to show its role in ensuring financial stability was described as the lender of the last resort. What we mean by that is that the central bank, at its discretion, can step in to help out a financial institution, whether publicly or privately owned, if it is threatened with bankruptcy, even if its bankruptcy is a result of its own absence of due diligence or its own misbehavior or poor risk assessment or whatever it may be. The RBI, the central bank, is nevertheless charged with the function of being a lender of the last resort to such failing companies so as to guard against financial instability. That is, you still help out someone who is not deserving of help, just in order to ensure that there is no domino effect in the economy and that other institutions are not affected by what is called financial contagion, the spreading of this infection of bankruptcy. After the global crisis of 2008, this role of guarding the financial stability of the country gained great importance when the G20 got together and decided on a concerted course of action for all G20 member countries and all other countries in the world to take, such that if each one guarded the financial stability in their own country, then global financial stability would be ensured, and it could not be ensured in any other way. And in accordance with the G20 resolution, all central banks in the world were asked to issue financial stability reports twice a year. And the RBI is issuing financial stability reports every year in June and in December. So coming June, we will see the next financial stability report. And so these functions become add-ons to the functions of the RBI. You know, it's there with 15,000 employees. It can't hire more employees just to do the financial stability report. So they have to adjust all their tasks so that they can produce this financial stability report. So their tasks are constantly getting added to all the time. Now, there are some corollary functions of guarding financial stability, and that is banking regulation and supervision. In India, banking regulation and supervision is performed. These are separate tasks. They are performed within the RBI, but in other countries, they have been taken out of the purview of central banks, either in part or in full. So in Canada, for instance, banking supervision is done entirely by an organization independent of the central bank, the Office of Supervision. They do the supervision. They ensure that banking rules are being heeded. America has a very complicated setup. Some banks are regulated by the Federal Reserve. Other banks are regulated by state-level regulators, and supervision is similarly split. So countries have varying provisions, but in India, banking regulation and supervision falls squarely within the ambit of the RBI. It's a huge job, just by itself. And finally, as part of the core functions of all central banks, the Reserve Bank is a banker to all governments in the country. It maintains the banking accounts of all scheduled commercial banks. So these are the four core functions, and each one is massive by itself, and the four together adds to a massive responsibility. Of all of them, I think being the guardian of financial stability is the most important. And although the RBI has been constantly criticized for being too conservative, most recently by the government of India when they said, hand over those reserves to us, what are you keeping those reserves for? Let us not forget that the Reserve Bank of India just by itself has a AAA rating in international financial markets. That by itself is a huge source of confidence to us as a country. The Reserve Bank of India, the Central Bank of India, has a AAA rating, which, needless to say, the government of India does not have. The government of India does not have a AAA rating. It has a less than AAA rating. And it is languishing somewhere, well below. So between the two parties, there's no question about which is the financially more sound and more prudential partner in this war that took place. Although, of course, you can say that maybe the RBI was erring on the side of being too conservative. Let me add another four functions which are specific to India. In addition to those four, and in addition to banking regulation and supervision. In India, the Reserve Bank of India is the issuer of public debt. It does issuance of public debt both for the central government and for all state governments. Now, in the Finance Act of 2015, an unsuccessful attempt was made to take this function of public debt issuance out of the RBI and into something called the Public Debt Management Agency, PDMA. It was a very ham-handed effort. It was built in, that amendment of the RBI Act was built in to the Finance Bill of 2015 But as I said, it was so ham-handed. Just a moment, I'll tell you what was wrong with it. It was removed by Finance Minister Arun Jaitley before the final bill was presented to Parliament for passage. So as things presently stand, public debt issuance is still with the RBI. What was wrong with what was done in the Finance Bill of 2015? What was wrong was, you see, here is the Finance Bill, which is the union government's bill, right? It's being presented in Parliament. So it could only talk about public debt issuance of the union government securities. It cannot talk about state governments. It cannot deal with state government securities. So the PDMA, by definition, could only take over the task of public debt issuance of the union government. But then the same amendment proposed in the bill suspended the Government Securities Act of 2006, under which the RBI issued the debt of both union and state governments. So what was happening was this amendment was so badly designed that it was stopping the RBI from issuing any government's debt. It was transferring to the PDMA only the right to issue union government debt. So how are state governments going to issue their debt? Starting from the day on which this Finance Act went into operation, there would be no agency in the country which would be empowered to issue state government debt. So then that's why many of us wrote about this, and so it was withdrawn, and public debt issuance is still with RBI. In India, it is the manager of foreign exchange under the FEMA of 1999. Prior to that, there was FERA, and now there's FEMA. And so the Reserve Bank of India maintains the external reserves of the country. It is charged with the function of ensuring a smooth foreign exchange market. It does not target any particular external value of the rupee, but it is in the business of ironing out volatility in the foreign exchange market. Then in addition to all this, India being a developing country, the RBI has to play a developmental role in rural credit and financial inclusion. And last, but by no means least, the RBI is the only source of data on, for instance, balance of payments, external rupee exports, financial value of exports. The DGCIS does maintain data on the physical flow of exports and imports, but the payments data are available only from the RBI. And the RBI has also stepped into the breach in many matters where there was nobody performing that function. So for instance, if you want to get information on state finances, I know many of you are interested in state finances, the RBI has an annual publication called State Finances, in which it gives you all in one place the current state of affairs of states, all the states in the country in one place. So this is a huge data function which is being performed by the RBI. If you just list the publications that come out of the RBI, the annual publications like the annual report, of course, the report on currency and finance, then there are the quarterly publications, then there is a monthly RBI bulletin, there is a weekly statistical supplement, there is a trend on progress in banking, report on trends and progress in banking in India, the financial stability reports, massive data function, and of course the annual state finances. I live on the strength of state finances. If ever I want data on state finances, I go to the RBI publication. The Ministry of Finance at the center also brings out a consolidated, public finance data, but this is for center and states in aggregate. If you want to know a particular state, like Telangana or Gujarat or something, you have to go to the RBI publication. There's no other source. And then they also have an online database. And so that brings me to the end of the special functions performed by the RBI. And overarching this whole thing, all these 8 functions, it has to be vigilant against cyber threats. It has to preserve the cyber security of all its operations. That is really an amazing, it's neglected, but it is so upfront in terms of what the RBI has to do. I don't know if you remember that some years ago, the Bangladesh Central Bank, I don't know what exactly its name is, Bangladesh Biman or something like that, they lost $1 billion because their account with a bank in the US was hacked into by somebody. So This is a measure of vigilance which the RBI has to exercise the entire time. It's not just currency, it's its accounts with various banks. It has to ensure its cybersecurity. It has to ensure the physical security of its premises. So for instance, just to give you a small example, in any canteen facility, a department of the government of India is asked to outsource its canteen operations. The RBI can't afford to do that because they would be at the mercy of the outsourcing agent and of the diligence that they do on their employees. Otherwise, a terrorist in the guise of a cook, he might be a very good cook, but he can enter into the bank building under the guise of a cook and blow up the building. You know? So the RBI, therefore, I want to stress this again and again, it cannot be treated on par with a department of the government of India. It's very separate, it's very special, it's very foundational. You cannot say that they should outsource their functions and not have in-house staff who are cooks and dishwashers and so on, because they have to do that in order to protect the physical premises physical premises and the security of their operations. Now I get to the next segment, which is the functioning of the central board in practice. In the first segment, I only dealt with the statutory role of the central board. But how does it actually function in practice, especially when there are so many functions? 8 functions, 4 core, 4 specific to India, huge functions. How does the central board manage to keep track of this whole thing? So the way it is done is that there are 6 meetings every year, mandated. There have to be at least 6 meetings every year. And then members of the central board are also made members of committees and subcommittees to oversee particular functions. And 2 of these committees are so important and powerful that they are themselves called boards. So there is the Board for Financial Supervision, BFS. It's a very, very powerful committee of the board. I was never a member of the Board for Financial Supervision, and looking back, I'm very grateful I was not a member of the Board for Financial Supervision, because during my period on the 2011 to 15 was when the PNB scam was rolling and really gaining steam. The other board, which is very so important, it's a committee which is called a board, is the Board for Payments and Settlement Systems. And then there are a whole bunch of other committees, audit, security, and so on. I was a member of some of those committees. These boards, these committees meet quarterly, and then they report to the central board at the next meeting of the central board. So how did this whole system function? There were some, I would say, lacunae and lapses. You know, what happened was that, so there I was a member of the central board, and I didn't know that this mess was building up in PNB, which had to do with the supervisory failure at the end of the day. Now what happened was, because there was this double layer of supervision, those of us who are not a member of a particular committee tended not to look at that function at all. You know, we just waited for the Board for Financial Supervision to come and give us their report. They said everything was fine, so we believed them. You know, and similarly, the committee of which I was a member, we spoke to the central board and so on. Looking back, I think there was a problem that whether it was the Board for Financial Supervision or the Audit and Risk Management Committee of which I was a member, we didn't have enough time. Typically, a meeting of a committee or the board would take maybe 3 hours, 9 to 12 would be the typical duration. But it really needed a lot more time. I think especially the Board for Financial Supervision should have examined all the circulars issued during the quarter under review. They should have looked into those circulars, looked at what were the deadlines specified in those circulars, asked for data on whether the banks had responded by those deadlines, what was the penalty, what was the wording of the circular. That is the kind of detail to which you have to go if you don't want these scams to happen. So I think these meetings tend to need to be of slightly longer duration. And the central board meeting also, I think, could gain from more time, at least 6 hours, if not all day. I don't know if you remember on the November 19th meeting, which was the big meeting at which this resolution happened, the meeting lasted for a whole day, if you remember. And the media, who were standing outside, they were getting really tired because they had set up all their equipment around 12 o'clock when they expected the members to come out. And they were not coming out, and they were not coming out, and it was 5 o'clock and 6 o'clock, and then finally they started coming out. So it was a long wait. And it was very unusual for a meeting to have gone on for an entire day. But I think that is the kind of duration you need if you really want the central board to perform as the watchdog that it is meant to be. The last of my 6 segments, and I really have taken far too much time, I think, so I'll just deal with the last segment. Yeah. I'm an economist, and so I must report to you on what the economics research literature says about the autonomy of a central bank. Does the economics research literature say anything about whether giving autonomy to a central bank is a good thing? As it happens, it hasn't been very widely researched, but there is one economist named Alex Zuckerman, it's spelled Cukierman, he's an Israeli economist, who in the 1980s did a series of studies which had a huge impact, in which he established through cross-country regressions. He established that the more autonomy a central bank had, the better its performance was. Now, the minute you talk about a research result like that, you have to ask, how did he measure autonomy? And you have to ask the question, how did he measure performance or outcomes? So how he measured autonomy was by the duration of time served by a governor as a percentage or as a fraction of the statutory term he was given. So if on average across governors in a country, all of them served out their full statutory term, then that country would get an average value for the autonomy measure of 1. But if let's say you had two governors in the history of the country, and one of them served for only half of his term, and the other one served out a full term, then you would be taking an average of 1 and 0.5, and you would get 0.75 as a rating for autonomy. So that was his rating. So of course, when Urjit Patel resigned, he pulled down the autonomy average of by that measure, right, for our country, because he had a year left in his 3-year term. But it's an average across governors. And for the outcome, how Alex Zuckerman measured it, this was in the 1980s. He measured it at that time, outcome in terms of inflation control. Now you must remember that economists work in a context. And in the 1980s, what was the prime concern of everybody? The prime concern of the whole world was inflation, because there had been 2 oil price hikes in 1973 and 1979, and 1980s was a time when they were all desperately trying to control their inflation and bring it back to ground level. So he took that as a measure of performance, and he established that more autonomy you give to the central bank, the better able they will be to control inflation. Then after the global crisis broke, all the reporters went with microphones to Alex Zuckerman, who's somewhere in Israel now, and they said, you said that autonomy was a very good thing. The Federal Reserve had a lot of autonomy. What happened? They failed completely, okay? They collapsed, and they brought down the world with them. And of course, Alex Zuckerman had to backtrack a little, and he said, yes, I do concede that price stability is not the only thing that matters. Financial stability also matters, and that requires much more than keeping track of prices. It means keeping track of financial markets in general, derivatives, risk, and so on. So I just wanted to give you a quick, very brief peek into the economics literature. I want to end here. I'll just refer to the reserves issue. As I said, I'm willing to wait for the report that will be put out by this committee that has been constituted. I respect that committee, the members, and I'm hoping that they will come out with a considered judgment. I want to repeat that whatever their judgment, I don't think they should compromise on the need to keep the Reserve Bank free from fiscal pressures from the Government of India. The Reserve Bank should be free to perform its own functions without having somebody breathing down their necks constantly to say, give me more, whether it's the flow dividend or the reserves. That's a very, very bad pressure to have. Finally, what were the other issues that were raised during that big blow-up in October, November? A lot of them had to do with the liquidity crisis consequent upon the IL&FS collapse, IL&FS default. There was a contagion impact on non-bank financing companies. The government wanted the RBI to do a lot more to ease the credit crunch. The RBI had done a lot already when the first default took place. I don't think they can be faulted on that score. But a lot of other issues were raised by the Government of India, like, for instance, Tier 1 capital adequacy. Under the Basel rules, only 4.5% is required. In India, the RBI has regulated that 5.5% is required. The government said, why do you want 5.5%? You do 4.5%, which is the Basel rule, and you'll free up more credit in the economy. And the RBI's response was that they are in charge of ensuring that banks are prudentially regulated. And in their judgment, 5.5% was what was required. And under the present situation where banks are in terrible shape, it gives international financial markets a lot of comfort to know that banks are being regulated by such a conservative regulator, that the Tier 1 capital adequacy in India is actually higher by a whole percentage point than what even Basel requires. So they feel that the Indian financial sector is in good hands, and they feel encouraged to enter into India. So I think these issues should not be forgotten when we examine the decisions that the RBI takes. Let me conclude by saying that it is not as though this was the first time that RBI governance was questioned. There have been periods in the past when RBI governance was questioned. Like, for instance, during the Harshad Mehta scam or the Ketan Parikh scam. At that time, not just the government, but Parliament raised questions as to the internal processes of the RBI and how such scams could have happened. And then the RBI responded in a very positive way, and processes were tightened up and so on. I have a lot of faith in RBI as an institution. They have a very long history. They have guided us well. They have guarded the financial stability of the country. And I hope that even though the RBI Act gives the government the upper hand, the Government of India will continue to look upon the RBI in a very proud way, proud of the way RBI has functioned, free to criticize it, free also to take criticism from it, but at the end, not treat it like a department of the Government of India. Thank you.